All right, so getting into the morning, I talked about this a couple times in regards to what I was looking for. I did talk about specifically that we are obviously clearly in a downtrend. I did have some standard deviations marked off. Let me bump up to the 72-minute real quick. Sorry, I was getting a little quick there. I need to slow down. But immediately in the morning, this was a really obvious CSS projection right here, right? We have this green bar. We have this black bar that puts in this high. We close below it over here. So I'm going to be framing a CSS projection off of this. It's the most extreme of the range. So it's going to be the clearest and most high likely area to frame something off of, because this was the last move before we started to roll back over and continue this move down right over here, right? So understanding that, right? Knowing the function of the standard deviation areas, right? We have -2, -2.5. What can we anticipate in the -2, -2.5 area is either it's going to be a retracement or a reversal. Now, we can see on the 72-minute what happens specifically in this area right over here. This is the 72 chart, keep in mind, right? So we see this low over here taken. We kind of got a double sweep. This is going to be a double sweep on a 12-minute chart. But understanding, like I said, the function of that and what is likely to happen. Now, I will say here, there was kind of conflicting areas, because this to me right down here, which we finally met, was arguably extremely clear, right? I wanted to see that. Not specifically an AM session, but I wanted to see it at some point. Why? We have these beautiful resting equal lows right over here. And you can see once these equal lows were formed, we expanded away from them, and we know that price will refer back to that in the ladder of time, right? As well as this basically unmitigated area right down here, because you can see the 50% was never met. So initially, that was definitely something that caught my eye in the morning. Now, seeing this -2, -2.5 area and zooming out just a little bit, we can see that we are obviously clearly bullish here, right? We failed to put in a new high right here. So that gives a hand tip that there is a possible either deeper retracement likely, maybe coming down and taking out this low right over here, which, correct me if I'm wrong, Thursday, that should be some sort of, is that FOMC? I can't remember off the top of my head. Possibly. I don't remember. But it should be something, because that kind of price move, I don't think just happens unless we just went straight to the gulag there, right? But getting back to this specifically, like I said, I was kind of mixed. I wanted to see, and obviously I wanted to play this continuation down. Now, what happened right here, right? We can see that as New York opened, opening bell sent us directly up here, right? We have this 12-minute CSS form right here, okay? But we also had, and please disregard some of these. I'm not sure if this is too cloudy for y'all's charts, but I'm going to delete this and re-go over it here in a moment so you can actually see it clearly. But what happened here, right? We have this big 12-minute imbalance right here. On the 72-minute, if I go back up to that, we have this big fractal right here, as well as the 72-minute imbalance that we were rejecting off of right here. So basically getting back into this in simpler terms, that is showing that there is a lot of conflicting POIs within each other. Knowing that and understanding that price, given what has happened here, and the conflicting POIs, especially on the higher time frame, that is the biggest hand tip that possible chop is looming, right? Because when stuff starts basically coming in congruence, right? We have bullish, we have bearish POIs hitting each other, and both are getting respected at all times. That is your immediate hand tip that most of the setups that occur are going to be much lower probability rather than if price was expanding. And the pre-market setups show exactly this. So with that being said, I'm going to dive a little bit more deeper into that here in a moment, but I want to go over the pre-market setups real quick. So pre-market setups specifically, right? Ignoring completely all of this mess on the right side of our chart, what do we see? Clear, obvious downtrend, right? We have these CSS projections right over here, these standard deviation projections. We got a clean close below the -1, -1.5 over here. So we can automatically anticipate that -2 to -2.5 to be met at some point, right? So if we zoom in on the 12-minute, and I believe Brendan sent this setup in here. I don't think I was directly on my charts at this time, but this is actually super, super clean because we started to get a little bit more range bound here. Not range bound specifically on the 1 minute, but more so the 12 minute, which is okay, right? You're obviously being a higher time frame chart, you're going to get in some point where there's going to be where it's going to look rangy on the 12 minute, but whereas on the 1 minute, there's actually really, really clear structure to frame off of, right? So what we see happen is price trades down here. We fail to close below this low right over here. So automatically, what highs become weak? We have two possible areas. We have this one right here, and we have this extreme high right up here. Ultimately, this is the external high that put in this low. And the failure to close below this, in turn, makes this a weak high, right? So this setup right here, right? Now, as I just said just a moment ago, this would be a low-hanging fruit part. What does a 12-minute do right here? Closes above it, right? Confirming this CSS right here. Once that happens, what do we see price do? Price retraces back to this 12-minute fractal right here. We get a sweep. We actually sweep that fractal low, getting a deeper mitigation on this 12-minute CSS right here. And we get that return back in range. And where does this ultimately send us to? Right up to that extreme weak high, right? So that's the first setup. This was super, super clean. These type of setups, you need to screenshot and literally just like look at them throughout the day at any given time. And those are always going to just be the ones that are the no-brainers that you just see it print where structure is and what the 12-minute is telling you, and just a no-hezzy execution, right? So I'm going to delete that so it's kind of out of the way. So the same exact sequence happens. Let me draw this over so it's not right there. Same exact sequence happens right here. This was that first one I sent, I believe, during pre-market. We had this fail to close yet again right up here. And this is what I was talking about, more so range conditions, because these specific functions happening at the extremities of this range right here. You can see we have range low over here, range high over here, fail to close. Same function happens up here. We fail to close, price returns back into the range, right? And range bound areas, more times than not, unless proper structure is formed, you want to only be engaging at the basically quote unquote premium versus discount areas. Like obviously you want to be shorting up at the top of the range and you would be longing more so at the bottom. And both of these, if we took out a 50%, both of these would be in the respected area to actually engage in these kind of setups, right? So like I said, 12-minute fail to close, right? What do we get right here? Now there's no wick on this, but it's the same exact function if you're looking at candlestick structure. We see this low right here. Price closes below that. What do we have resting right here? Now, this isn't a exact entry that will be on stream yet, but it is something that is still very, very important to note because it carries the same exact weight and the exact same principle of everything, because it's truly just how price moves, right? So we see this break right here. We see this beautiful 1 minute fractal right here. You can see wick low, wick high, break right there, confirms that fractal. What does price do? Price returns back up. We put in this swing high right here. This is more so in a golfing candle right here. We break below, taking an entry off of here, stop at this high, not expecting price to really want to refer back to this. And automatically, what can we see? This is almost identical. And I want you to remember this because I showed you this on the 72-minute just a moment ago, right? What does this look exactly like that price has just referred back to? I want to zoom out a little bit real quick, right over here. Tell me this is not identical to this. Imbalance, equal lows. Put a relative equal low. Run it back, right? So getting back into that right here, knowing that these are going to be easy targets in the way range bound areas similar to this move is they're going to move from extreme to an extreme, right? We can identify low hanging fruit objectives to be where this internal low right here, these equal lows right here, and ultimately you could either do this low or you could target this CSS. And why that CSS? Because we have a fractal resting within it. So double layered confluences right there, we can anticipate price to be gravitated more towards us. Think of them in terms of like magnets. The strength of a magnet as opposed to like a weak magnet is going to be substantially different. And when you get those layered confluences, those are always going to be really, really strong points that the algorithm price is going to want to refer back to, right? So there's that setup right there. This next one, this is picture perfect. These are the kind of setups with the specific model that is being shown right now. These are the exact setups you want, right? Now, obviously, we have 3 different POIs we mainly use. Those are going to be fractals, CSSs, and imbalances, right? A lot of times, my favorite one is going to be these fractals because they actually give super, super, super quality moves, right? You can see on the 12-minute. Let me zoom in a little bit more so you can actually see it. Wick low, wick high, break below confirms this fractal right here. We see price refer back to it. And what do? Let me delete this real quick. What does price do? We put in equal highs. Now, we don't immediately trade away from this, right? We start to consolidate a little bit around here, right? And we get a beautiful inducement. We barely take this high. Looks like by a tick, maybe, which is perfectly fine. Now, obviously, those deeper sweeps are going to be nicer to see. But in most cases, as long as that high is taken and closed back within, that is going to be the hand tip of possible engagement, right? So we see these swept right within this fractal. We see the break of this right here. Did not mean to grab that tool. We see the break of this right here. Now, we could be taking an entry off of that, the break of this, or if you want to be a little bit more conservative, you could wait for this CSS to form, which confirms right here. Now, with this, you missed the entry. But that is why I like these specific break entries more than anything, because it almost always, not almost, it always confirms an entry of some sort, right? So we'd be taking the break of this, and in terms of targets, similar to the one before, right? We want to identify a low-hanging fruit objective, and we want to identify where price should gravitate towards, right? We want to identify, basically, in a sense, we want to put ourselves in a position where price should run past our target. For now, price should run past our target and reach some form of extreme. This is going to train your eyes specifically to remember these, and it's going to ingrain in your mind, and subconsciously, your mind's going to adapt to it, and over time, you're going to be able to take these higher R trades, right? So, actually, I want to answer this real quick. Did you just market order in when you see the break? So what you do is you literally just like sell stop, place it below once that's confirmed, and the break of that candle. Yeah, sell stop. There you go. Thanks for that, alt. And there was this one right here. Now, this one is a little too close to open for my liking. We do see price form a fractal right here. Price comes up. Let me move this back over. Sweeps this high right here, closes back within range. Then we get some nice displacement back into the range. Now, there's kind of two things I don't really like about this completely, right? You can see that external part of this micro range right here has already been met, okay? You can see we get a little wiki business right here. But in terms of just overall setup, this isn't too bad. But like I said, I always want something to base a exit off of, right? Here, to me, this wouldn't be as clear. Now, that is where you kind of have to zoom out and see possible POIs on the left side of your chart. But stressing the importance of just focusing on this current structure is going to save you more times than not. And like I said, this one being at, oh, my mind just went blank. Being at range low right over here. To me, like I said, just not a bunch of structure to form something off of, and not something I would really want to fully engage in, yet it is still decent. But ultimately, the main driving factor would be New York Open, literally just a couple minutes away. Because things, especially 825 right here, things can get a little bit wonky. 825, usually you'll see some sort of impulse candle significantly higher than the previous range of candles in pre-market, right? So getting into actual market open, excuse me, what we see here, right? And I remember Brendan asking, and I think a couple of people asked about this setup right here and why I did not like it, right? Obviously, like I stated, I always wait at least 15 to 20 minutes, getting closer to that at first initial macro at 8:50 a.m. CST for price to, or to start engaging in price, because I know that the first 15 minutes, a lot of funky stuff can happen. More so just impulsive expansion in a certain direction, as you can see right here. But the main driving factor in this, and I want to stress the importance on this because I talked about this at the beginning of this review, was this 12-minute CSS right down here, right? Now, what we see price do is we engineer some relative equal lows right over here. We see price come down, induce this low right over here. What do we not touch? This 12-minute CSS. The 12-minute POI is not met. And if a 12-minute POI is not met for these specific setups, that is a complete disengagement, because what we know can happen here is price can easily chop around a little bit and get the actual sweep down, tapping into the CSS, possibly getting a deeper mitigation into the lower part of this imbalance, or tapping this previous inverse CSS right over here, right? knowing that and anticipating that is going to be huge for you, because more times than not, that is going to keep you out of a lot of mess. And I think we talked about that a lot yesterday in regards to, there was actually some beautiful, beautiful examples of this, what I just said, happening to a T, right? Banks and institutions getting orders in at open is what caught. Yeah, exactly. It's just an influx of volatility being injected into the market, and it's not something realistically, if you're trading that, unless it's just uber clean, it's more so a gamble than anything, right? So next, obviously, I want to zoom out a little bit because this explains the importance. Let me delete this, of these two setups right here, because these are the next two sweep setups. These were completely avoided because Ark and I were able to recognize the conditions that we were in, and that we had conflicting higher time frame POIs, which is what would have kept you out of this. Now, obviously, that is more intuition based, but in a mechanical lens, this can easily be identified, right? Because what happens here is, let me delete some of these real quick, just so it's out of the chart, so y'all can actually see what I'm about to mark. And if you're in stream, you should remember this. But what we see here, right? We get a 12-minute CSS down here. We also have this big 12-minute imbalance here, right? Price respects it a little. We get some expansion off of it. Ultimately, what happens here? We close above the imbalance, so automatically we can be or start to anticipate some form of higher prices, giving a deeper mitigation, right? Now, what happens here is price fails to close above this high. This is significant to me because this is showing indecisiveness in the marketplace. If this would have closed up above, any bullish setup within a POI would have been game on for me. But specifically this function right here happening with all these conflicting areas, we had bearish imbalance right here. We have a bullish CSS. We have a bearish CSS right here. We failed to close above this, so we can think that these are going to be weak lows at some point. It's just not something I want to engage in. And it's something that I've personally, in prior times, a long time ago, has burned me. And it's not something I want y'all to have to go through, because I know it can be saved in just understanding what is being presented to you. And like I said, this can be understood in a mechanical lens, and it's literally just asking yourself what's being respected and what's being disrespected. If you can't really determine what is being respected versus what is being disrespected, that is your immediate signal that you should not be engaging in the market, right? And right here is exactly that, a bunch of conflicting stuff and showing an indecisiveness within the marketplace, right? So both of these right here would have been okay trades if that did not specific, like, so say right here, actually I want to note this too. First, this long, you can see this long, what I talked about, failed to close. So we can either anticipate a deeper mitigation or this to become a weak low over here. We see price sweep this, tapping in to a fractal, right? We have a fractal. Wait, where is this? Yeah, right here. This fractal right up here. Let me pull this over. Wick high, wick low, body close above, confirms this bullish fractal. Now, this, in terms of a setup, if you're completely mechanically taking setups, this is an extremely textbook setup. We have a 12-minute POI. We have a 1-minute sweep, a close back into the range. But what most would fail to recognize is what happened over here. This is extremely important to just view in an overall lens of what's happening, right? And I'm telling you right now, this specific close right up here kept two losers from, or prevented two losers from happening. And like I said, that's going to be a more intuition-based thing. But I'm telling you, just focus primarily on that, because you want to be engaging in expanding markets, not consolidating markets. Obviously, you can make a lot of money in shop, but it takes a very, very certain person for that to occur, right? So we have that long right there. Then we have this short back-to-back right up here. We come up, we wick this high right up here. And we can obviously be like, oh, well, we failed to close above this 12-minute right here, so we can anticipate a larger move down. But the problem is, what are we expanding off of right here? And we've already seen prior that these 12-minute imbalances are getting respected, disrespected, respected, disrespected. We can see that we're delivering from this right up here, yet we have this bearish confirmation confluence right up here. This extremely low probability. Yet again, they're just not quality setups directly because of that 12-minute chart and what it is telling us. Like I've said multiple times, let the 12-minute be your map. The 1 minute is just simply the car that's going to get you there. You need to let the map guide you in the direction, Because if you don't, then you're just going to get lost and you're going to get cooked. You're going to run out of gas and you're not going to know what to do. And ultimately, that is going to be your downfall to the market, right? So let me delete some of these real quick, and I'll check over real quick right here. Is this series of candles with none of them closing below the wick is the same you just mentioned, same idea? Yes, I will cover that real quick because this is kind of something semi-important on when to possibly anticipate either retracements or reversals, is basing off of candlestick structure. Let me delete some of these so you can actually see this. I believe that's right here. And then we'll jump back into the setups for today. So you can see this whole move down right here. What is price doing? We're closing below bodies, closing below bodies. Then towards down here, what do we start doing? We get a fail to close, fail to close, fail to close. This is all based upon candlestick structure right here. Understanding what is happening here on candlestick structure on the 12-minute is the same thing happening on the 1 minute. You can see sweep, sweep. It's a continuous thing. And when you see this specific thing start to happen after a larger expansion phase, that is a possible hand tip if it is in a certain POI that you can start to anticipate some form of retracement or reversal, right? So moving forward, right up here, we actually referred back to this. Let me delete this real quick. We referred back to this CSS right here. After we got this break right up here, we came back to the CSS and 12-minute fractal right here. Then we started to get some decent expansion off of this. Now, primarily today, what we did see was consolidation, expansion, consolidation, expansion. Obviously, that's how the market moves. But today was definitely something a little bit different in regards to this because there was not much structure forming for you to actually engage upon. It was tight consolidation, expansion, relatively tight consolidation, expansion, right? But zooming back into this, what we see happen here is price finally gets a closure above, right on this impulse right up here, close above this high. So automatically, we can start to possibly anticipate some high and some higher time frame, more premium POIs to be met by price, right? Just given that, either there's two things that can happen here is price will, and I'm going to tap into this here in a moment. Price is either going to consolidate up here more times than not. It will after a larger time frame break, which is, I believe I talked about that in the main live this morning, which should be on the recording. If you haven't watched it yet, I would, because that's more so just kind of live price anticipating certain things. That's going to be a little bit more meaningful than like reviews and stuff, right? But we finally get this confirmed breakup here, right? So there I'm leaning more bullish than anything, right? Because we've completely disrespected these. We've started to print more bullish POIs, right? And not trying to look too far left on the chart, right? We can semi-identify some certain areas where price could stall out, right? We have on a higher time frame up on the 72-minute, we have a 72-minute POI resting right up here. We have a nice 72-minute fractal. You can see low, high, body close below. This confirms that fractal. I know a couple people pointed this out in the morning, which is actually super, super good to see because that means y'all are seeing them with your own eyes. And that is ultimately going to be the most important factor here. But 72-minute fractal up here. We have this 12-minute high. Let me drag this over right over here. That price does reach for up here. Now, I'm not wanting to immediately flip bearish, right? Because we have this structural break over here. I'm wanting to kind of just be a little bit more at ease because to me, like I said a moment ago, what I saw right here and where we were overall, I was okay with leaning more bullish right here, at least short term. But obviously, bigger picture wise, like I talked about this morning, this low and stuff down here, right? But we get this confirmed close up here. Price, what does it do? On a microstructure, and this is what I'm about to get into here in a moment, we see valid high, valid low, close above. What does price do? Price chops right here. And I believe it was Aaron that took this setup, this short setup, which I want to talk about, which is actually decent if you understand the function of accumulation-driven events and where price should want to gravitate. So in terms of accumulation, what you can expect is if you're on the right side of the marketplace for given structure, obviously right over here, we're clearly bullish on the low time frame. We see price give a fake out up here, and I believe he took it off of the short right up here on the break of this candle, which was actually really good, just targeting down here. Now, this is something I would not promote taking for quite some time because this is technically counter trend given structure. But the quote unquote probably best setup of all of AM was not even an A plus setup. It was more so like a B, maybe A minus setup, was this right here. After that has happened, and I'll go back to this real quick. The accumulation, you'll get a fake out if you're on the right side of structure, a fake out on the top side if we're bullish, and price will want to gravitate lower. I remember saying when all this accumulation was happening that a possible manipulation is looming, ultimately coming down towards this really obvious low and within this 12-minute fractal, right? But what we see happen is price does not come down to this low. There was very, very likely some form of SMT here against YM or ES. What we instead we do is we bounce off of this CSS right over here, this last down bar that puts in this high. Then we get this body close right at the 930. Price refers back to that, sweeps that low internally, and expands a little bit off of there, right? Now, I want to make this clear, and why this is not an A+ setup is because what did we fail to meet yet again? The main obvious 12-minute POI. Now, obviously, you're going to say, well, isn't there a 12-minute imbalance there? Yes. But this is something I also talked about in stream, is the area that is going to be similar to what I talked about a minute ago on the low time frame chart about the magnet kind of perspective, right? When you have layered stuff, those are going to be the areas where you really want to engage with price, right? And if we zoom out some, we have the 12-minute fractal here. We have a 12-minute CSS. We have a 12-minute imbalance above it, right? But even if we go on the 72-minute here, what do we see? We see a 72-minute IFEG. We closed above this imbalance, which the high, I want to draw this out again. The high of this, you can see it going on my cursor. I'm going to change the color of this. The high of this imbalance, where is it almost perfectly lined up with? It is lined up perfectly with this low, resting with inside of this 12-minute fractal, which is also a 12-minute CSS, right? And like I was saying, that is exactly where I wanted to see price gravitate towards. Ideally, it would have been on this price leg down here, where it would have swept and would have gave us a nice bullish setup targeting up towards these highs, right? So let me bump down to 12-minute back over here. And this is also something extremely important if you are not able to join in on the live to the like max viewer cap, and or if you haven't watched the live review yet, there was a very easy way to say you took this. Now this being a B+ setup, this would be something you want to risk much lower on because there's not as strong of a confluence behind it. But the main important factor, and arguably one of the most important things, is where are you going to exit? Where should price go to and why, right? And I talked about this in stream. I believe it should have been before, well before it happened, was we gravitated down here, took this low, and ultimately the reason this high does not get met, right, is what are we lacking? We're lacking some form of relative equal highs, relative equal lows. We see price come up here during that previous manipulation seen up here. Price takes that, closes back within the range. What do we, like I said just a moment ago, we do not have relative equal highs or pretty rare. The only thing for price to really refer to here is that high. Meaning, if that is the only thing for price to refer to, that is not going to be a high likely area for price. You can automatically, once you see this specific signature, start to anticipate this not to be met. You need to be looking for some form of quote unquote low-hanging fruit area, and the most obvious one is either going to be this high, which is I think where around 10 points was, I believe so, if I remember right, as well as this fractal. This is really the main POIs we use. This is really the main point right here, which is exactly where you can see price tops out at. We wick above it, close below, tap it one more time, and that is where price stops out right there for that given period. And that is directly why this high was not met, because this specific function right here, this is something extremely important that you need to remember, because I'm willing to bet this has probably happened to so many people. They're anticipating a higher low to be taken, but the proper function was not met right here, and there's really only one thing for price to refer to, ultimately being one singular high, which is not near as significant, right? And that's just something that's going to save you from being in profit and then it just running completely against you, right? So zooming out a little bit, I'll be honest, there was not really anything in here that I would more so entertain. Once we did, let me delete some of these real quick, and if there's any questions. Was the 12-minute POI that was not hit you mentioned? What? Right down here? Or are you talking about this one up here?
The one right before open. It was just like 12 minutes. Yes.
Yeah. That's. Oh yeah, I didn't see you sent that. Oh, the micro chart tapped that. That makes sense.
Yeah, I just checked it right now. The micro chop actually tapped to the tick.
That's crazy. Is a series of candles with none of them closing below the wick is the same. Wait, I feel like I answered that just a moment ago. I think
you
I
answered
did.
that one already.
Okay. But getting back into this, right? Obviously, I want to kind of step back a little bit because this is a perfect example before I talk about this, because I know some people are going to be like, oh, well, how can you anticipate the accumulation or the chop to ensue, right? And I talked about this a moment ago, was this break above here, right? If we zoom in, actually, I want to explain this on the lower time frame chart, because we see this specific function and we all know the fractal nature of price, right? We see price do this exact same thing that is about to happen on the 12-minute. We get a nice close above right here. What do we do right here? Once we get that close above, we will accumulate. This is where a proper AMD forms, right? We will get some form of accumulation after a decent structural break, which is exactly what we see here. Ultimately, accumulation, then we get some form of move down, right? Now zooming in or zooming out on the 12-minute chart, what is the exact same thing that happens right here? We can see it. We get a decent structural break. The reason this is prominent is because this within this price like down is really the first, I'd say, okay-ish decent structural break, right? We've been in this long-term downtrend, not long-term, but for that given time frame, a decent downtrend for some time, right? We get a nice structural break with some decent expansion. What can we automatically start to anticipate? Some form of accumulation. This will happen more times than not. Price will accumulate after a certain structural break if it's going to be more prominent, and that's going to be at either structural shifts in just market structure and just general things like that. All right. So understanding that and being able to understand that choppiness is likely to ensue, as well as, I want to make this clear too, what time all of this happened was leading where? Straight into New York lunch, which we know is usually not the greatest time to trade. Usually we already know that some form of accumulation is going to happen more times than not within that specific time window, right? But in terms of really the only thing I would have liked here would be this short right here. You can see, and this honestly isn't even that clean. This is not something I would really take, but I just want to do this because I know some people probably did trade this. But right here, immediately, and this is even hard for me, and I don't want to give this as an example because to me it kind of goes against stuff in regards to what's happening here, because you can see we have this down bar here, we have this up bar here, CSSs. That is why we're within this tight range, conflicting POIs. But in terms of, I think the cleanest setup would be this right here, this short, because this 12-minute CSS right up here. Understanding that usually after these structural breaks, we either going to get some form of accumulation or at least some mitigation back into this area, right? So what we see price do is price does refer back up to this. And I want to make this clear. This is by no means is a clean setup, but I'm doing this primarily for the people that did trade within this. If you did, this is probably what you should have been looking at, because down here, there were some decent longs as we were bouncing off of here, because we were at the more extreme low of the range right here. But in terms of cleanliness, this one's going to be it. We have this 12-minute CSS. We can see price put in a high over here. Trade down, we failed to put a new high here. We come up, we induce this, which if we zoom in, similar to what I was talking about on the 12 minutes, like down here with these low wickings and price not closing below, we see happen right up here. Price comes up to this 12-minute high, which is equated to this 1-minute swing high right here, fails to close back in, and you could be taking a possible short targeting some form of internal lows and stuff, right? Which we see we have relative equal lows in this case. And we also have an unmitigated wick. The reason it is unmitigated is right here. You can see the 50% was not met when price referred back to this area right over here. And we'd even touch it right here. But that could be some form of extreme area for you to target, or possibly basically a tap into that fractal right there. But I'll be honest, all of this is just messy. And if you can, and I tried to put an emphasis on that this morning, if you can anticipate these kind of chop or this kind of chop to occur, it's best to just completely disengage. You're going to save yourself a massive headache, and it's just going to save you just mental capital, because at the end of the day, that's one of the things we are trying to preserve the most, because that's what keeps us sane in these markets. And like I said, it's just going to be allow you to execute the most at ease, right? So this next setup, as we're getting into PM, obviously we have 12:30 over here, my time. Usually that is where I start to engage with PM, if I'm even trading PM. Now, I'm not the biggest fan of PM. I usually just like to be an AM guy and kind of get off the charts and go about my day. But there's actually some decent setups today. What we see is price comes up here. Now, this is just hard to, and I hate having to do examples of stuff in chop, but it's definitely important to note, because like I said earlier, in this range over here on the 12 minute, on the 1 minute, it's important to identify the more extremities of the price leg or price range that you are in at the given moment, right? And we can obviously identify this where we have this low right here, we have this high right up here. Where would this setup be forming? In the extremity part of the range, where you would want to be and should be okay with engaging in some shorts. That's the most emphasis and most prominent point, right? Is you want to be engaging when price is more in a premium in a range for shorts, and engaging with stuff or longs when it's more in a discount area, right? So what we see is price refers up to this 12-minute CSS right up here. You can see right up here. Body closure right there confirms that, right? And this is strong displacement, so I'm okay with this. You can see we get a relatively impulse move off of this, right? Price then refers back up to it right up here. And there's kind of two things I want to talk about too here. And this is, again, probably going to save you a big headache for future price moves, right? Before I get more deep into this, there was actually a sweep prior that would have given you a 1R, right? But the better move was back here. And the reason why is because this right here is a relatively substantial price move. It is about a almost 50-point range. And what do we see right here? A lack of consolidation, just pure expansion up. And we know the market moves from expansion to consolidation to an expansion, right? So with these kind of price moves like this is a much larger scale. And I'll cover it in one of these shorts over here as to why it's different, right? We see almost a 50-point move up, just pure rippy mode right here. Immediately, once we start to stall out, you should start to anticipate some form of accumulation to begin, because knowing the exact function that price moves, right? We know that some form of accumulation is going to come after a larger expansion. Like, this is a prominent expansion. A 50-point move without much consolidation isn't just something like, random. It's not meaningful, if that makes sense. So understanding that, what we see happen here is price does what? It chops around for a little bit. What happens here? This is another good confluence right here. We see price give a fake out right here. Price gives a fake out right here. Knowing where you are in structure and what areas it's pointing off of, seeing this can be a confirmation almost alone. You see this fake out right here. Price then reverts back into the range. We come up, sweep the extreme part of this micro range right here. We then return back into the range, giving a short setup right off of the break of the candle that liquidated this high right here. And if we really wanted to get technical about projections, because this lack of consolidation, which is usually good for larger moves, like you can see here, but in terms of conservative targets, we can get a really clean CSS projection off of this, which you can see this -1, -1.5 price reaches that. It gives a little retracement back up to this unmitigated candle. And this right here, these two green bars are going to be a micro zone on a second chart. So that's the retracement likely area. And then ultimately you could either be targeting -2, -2.5, or if you understand that after the accumulation event driven has occurred with this lack of consolidation here, we can anticipate consolidation to be met, right? So you could even reach for -4, or if you're wanting to reach for these or this more conservative low within all of this consolidation down here, right? Now, even though I just talked about more extreme points within a range, right? I need to make this clear because I don't want this to confuse anybody right here. To me, right here, let me delete this. What we see, let me delete that, or let me move that back. What we see right here, strong expansion, right? We see price start to gravitate towards this low right over here. Now, this was not met yet, right up here. This is what I was talking about. This is a perfect example, hopping back into this setup right here of just going for these low-hanging fruit objectives, because you can see where this -4 lines up near this low. What does price do? Once that's met, it returns to where? 50% of the range or some form of unmitigated area. And knowing the function of that, what do we see price do? Price refers back up to where? 12-minute fractal right here. And the reason, to me, this is starting to gravitate more so out of range-bound conditions is all of these consecutive down bars on the 12-minute chart. You can see close below, like just it's showing willingness to want to continue and do something. Ultimately should be gravitating towards this low, because at the end of the big picture wise right here, what do we see formed right here? Generated relative equal lows. This low, this low, this low. Those will always be a magnet for price. And as we say, relative, at least the way I view them, relative equal lows and equal lows, equal highs, like dead equal highs and equal lows, will, to me, in the way I've seen them print, carry the same function as just dead equal lows and equal highs. And that's being, they will be put in, traded away from, and take out the high that forms them, right? And ultimately right here, what do we see? This high forms these right over here. Where does price refer to? These highs right up here. We have equal highs up here. That price formed. What do? We traded away from them, liquidated some lows. And it's literally just this continuous cycle right here. We see price refer back up to it. Where does it tap? 12-minute fractal right up here after this decent expansion down outside of this higher time frame CSS. And we see price close back within the range and start to expand down. Now, sometimes, and this is important to note, and it more so is codependent on where we are in structure and what we are really bouncing off of or delivering from. And if we are near like a prominent low in the given price structure that is formed right here, is these larger imbalances. And I'll say this now, is a lot of times I do not, I am not a fan of trades that are immediately coming back into some form of imbalance. To me, they're not going to be extremely favorable. Now, sometimes, like I said just a moment ago, that in given structural points and anticipating where and how price and how fast price is moving towards some form of low, like a weak low or something, you can kind of almost turn that off in the back of your mind. But at the same time, it's also important to recognize vice versa when you're in more choppy, more rangy conditions, when this could cause a bumpy roadblock for you, because this could easily put in a new high, because we know the function of an imbalance is what? It should put in a new extreme, right? And that does not happen here, just given directly off of how fast and where price is expanding from, right? But my mind just kind of went blank. No, I think that was everything for that. And then this is, this is another one. This one would have actually delivered, I believe, almost about a 1.5, and you should be ideally going break even around that kind of threshold. But to me, this is kind of premature, right? Because we had just literally wicked this low, close this, we get a baby inducement. And the reason I say this is premature is because to me, proper structure has not formed here, is because this right here. Balanced price range. What have I talked about multiple times? Balanced price ranges don't need deep mitigations in respect to what price is doing now. You can see we have some people like to call it a middle finger pattern. We have an up move, down move. This is completely balanced. There's really no need for price to get a deeper mitigation on this for this given price leg, right? And understanding that and looking where this is immediately gravitating towards is where this balanced price range. That's why it's important to either take down your target to like maybe like a 1-to-1 or something, or target the more, I guess you could say, extreme area, right? And this could be this fractal right here, or it could be like the 50% of this imbalance. But if we're going off the 50% of this imbalance, what do we see? A lack of room for price to expand. Right here, you're trading at a negative R because the 50% of this imbalance is resting right here. this would be putting you at almost a 1R, almost a 1R. And that's, you don't want to have or carry negative expectancy in this market. But I'm gonna type this out too real quick. So in the recording, balance price, man, I can't even type. Balance price range. That's what BPR means right up here. I'm just gonna leave this up here for a second. So like if you're watching review later on, you can refer back to this right here. You should know what that is though. They do not give deeper mitigations likely, right? Now, this is why, to me, this was a better setup right here. Because what did we allow actually form here and give us something to actually target with high confluence? We let structure form. We got some nice accumulation here. We saw an attempt to get a fake out right up here. We then traded down. We liquidated this internal low right here. We took this more extreme, and this is based upon this 12-minute fail to close that we were talking about here, where I said this would have been a little bit premature because in terms of targets, proper structure was not there yet. But here, like I said, proper structure has been formed. We have what? Equal highs. What do? They run the low that put them in. This low put in these equal highs right up here. And what does price do? Refers back to that after there's a met. And automatically, once that function has been complete, what can we anticipate? Price to gravitate back towards us, right? Now, the main emphasis here is proper structure and letting it form, as well as having something to physically target, because we have these equal highs right here. We have this high right here, right? So this already is giving us something decent. This is almost just alone going to be a 1.4 for 12 points, which is not bad. I mean, that's $240 off of one contract. I mean, if you're copy trading accounts, that could be your day alone, right? And it's important to understand that. But the main emphasis, like I said, there's actual some form of structure to base an exit off of, right? And now, once this accumulation has ensued, if we're really wanting to get technical and do some sort of CSS projections, just given the size of the CSS candle, and that's something else I want to talk about too, real quick. CSS candles, the larger ones will give those better moves because the range of them is bigger and we understand candlestick structure. And just overall, the larger the manipulation, the larger the what? The distribution, right? So if we're wanting to get CSS projections off right here, we can see that price. Let me draw this out a little bit more so you can actually see this and it's not just hovering right over right here. This will probably be better. Yeah, this is better. We can see price immediately expand towards that -1, -1.5. What is this area? A retracement likely area, right? Price then refers back to this imbalance. Knowing this is a retracement, this is kind of the more extreme area because we have this fractal right up here. The CSS is somewhat kind of mitigated. So this is where price refers back, furthering expanding off of. We get a nice body closure above the -1.5. So where should price expand to? The -2, -2.5. What do we get at the -2.5? Body closure above, and price ultimately gravitates towards that -4. And solely based off that 1 minute CSS projection, where does price top out of? That -4, which is in alignment with this 12-minute CSS up here. Now, I want to note something too on this price leg and why longs would have been favorable here, right? If we zoom out a little bit, what do we see on the 12-minute chart? Like I was talking about a minute ago about candlestick structure on the 12-minute, we see price start to close back within a range just based on bar by bar. Close back within a range, inside bar. Take the low, close back within a range, inside bar. That is what that setup is framed off right there. But the most important factor here is, where are our POIs on the 12-minute? We have this CSS up here, and there is absolutely nothing really right here until this fractal right here. We have this fractal in CSS more at the extreme part of this range, which is where all of this consolidation is right up here. Now, that's important to understand because once some proper structure is formed down here for you to actually engage in some longs targeting that area, that the price moves are going to be more violent and more speed, because there is nothing as a roadblock really for this based off of the 12-minute right here. And that's important to note. But really, I think that was basically the last thing I wanted to cover for today. I did not realize that was 50 minutes. That was actually way longer than I thought. But I'm going to open it up for questions now.